January 2025, a single announcement from Chinese startup called DeepSeek raised $800 billion in the United States market. Google crashed, Nvidia plummeted, pure panic around the markets. But here's the thing that everyone missed. While retail investors were panic selling, thinking the AI boom was over, the smartest institutional money on Wall Street was doing the exact opposite. They were buying aggressively, and they were focusing on 4 specific companies that I'm about to reveal to you. That crash wasn't a sign of AI weakness at all. It was actually proof that we're at the most explosive moment in AI revolution. And by the end of this video, you'll understand exactly why these 4 companies could deliver life-changing returns over the next decade. But first, of course, smash that like button if you want to see, more deep dive investment analysis like this, because that's what we'd like to do on this channel. And I'm going to level with you. I've been analyzing technology investments for over a decade, and I've never seen anything like this what's happening AI right now. I'm sure no one else has either. We're talking about a market exploding from $279 billion to almost over $2 trillion by 2030. That's a 36% compound annual growth rate. That makes even the dot-com boom look very small. Tech giants are pouring $320 billion in AI infrastructure this year alone. Microsoft, $80 billion. Amazon, $100 billion. And this isn't speculation anymore, folks. This is the greatest reallocation of capital in human history. But here's why it really matters for all the investors out there, including me. While everyone's obsessing over whether to buy Nvidia, at 40 times sales, they're completely missing the 4 companies that could deliver even more explosive return. And these aren't the obvious plays that everyone's chasing. They're what we like to call the infrastructure builders, companies that make the entire AI revolution possible. And today I'm going to break down each of these 4 companies, show you exactly why they're positioned to dominate, and give my specific investment strategy for playing this opportunity. So let's dive in. As always though, this is not investment advice. Please do your own research before you buy any stock. That's what the good people do. Let's dive in. First up, it's probably the most controversial, trendy AI stock on Wall Street right now, Palantir. Ticker PLTR, and guys, their recent earnings were absolutely spectacular. I've been following Palantir for a long time now. I made a TikTok video about 2 years ago when Palantir was around $26 a share, telling people to look into this company. And now looking at today, it's worth over $100, $180 a share. So I think I was kind of onto something. But with that being said, they just had their own earnings. And there's the first time ever that they had $1 billion in revenue in 1 quarter. That's the first time in company history. Revenue was up 48% year over year. But here's the thing, they also just signed a $10 billion contract with the US Army. That's the largest software deal ever. Now let me explain what's really happening with Palantir though. That the mainstream media, that's not necessarily talking about. This isn't just another software company riding the AI wave. They've literally became the operating system for modern warfare and enterprise decision making, and of course, the United States government. When Russia invaded Ukraine, it was Palantir's AI that actually helped Ukrainian forces achieve what military experts called impossible, holding off a superpower with a fraction of the resources. Their Maven smart system now coordinates battlefield intelligence across 3 major military commands. But the real story is, the one that has the stock up 147% year to date. It's the commercial transformation. The US commercial revenue exploded 93% year over year. And listen to this, Walgreens deployed Palantir's AI workflow to 4,000 stores in just 8 months. IG accelerated their underwriting prices by 5 times. A major healthcare client just signed a $26 million contract just after a 5-week trial. So that doesn't give you an idea of, if their software is worth it. I don't know what to tell you, man. And here's what's really caught my attention about, Palantir. Point72 Asset Management just acquired 30 million shares, even at the price that it's at now. Joe Soros, his fund, they own 18 million. These aren't retail investors chasing momentum. These are the smartest money managers on Wall Street doing the same thing. Granted, they were a little bit late, in comparison to retail investors like myself, but they're starting to catch on. And because of that, they have to pay a premium. But with them buying so much, I don't see why the stock can't continue to go higher. Granted, with the run that it's had, of course, the pullback is natural. That's part of the game of investing. But that'll create an opportunity for more retail investors to jump in to get the stock at a cheaper price. Now, I know what you're thinking. As Conrad touched on a little bit, the valuation looks insane. 76 times forward earnings makes even Tesla look cheap. But when you're achieving a Rule of 40 score of 94%, if you don't know what the Rule of 40 score is, no worries, I can make a video about that later. But essentially, it means your growth rate, profit margin exceeds 94%. You're earned the right to trade at an extreme premium. They are executing at a crazy level, and I absolutely love this company, mainly because, their CEO, he's one of those guys who's going to go to bat for his investors. Other CEOs, they like to, just take back and try to listen to what their board likes to say. But Alex Karp, he's definitely someone who's going to be like, put his middle finger to the people who are telling him what to do, and like, I'm going to do it my way, and you're going to like it. And that's what people love to see as an investor. That's what I like to see. And, with the Trump administration back in power, focusing on AI-enabled defense spending, And Palantir is positioned to capture an enormous share of what could be, you know, $1 trillion transformation of global defense infrastructure. That's why Palantir was one of the favorite stocks we want to talk about today, but it's kind of pivot on to the next one. Now, let me introduce you guys to a company that, let's say, 99% of investors barely even heard of, but they just released their earnings as well, and guess what? It delivered 625% growth rate last quarter. That company is called Nebius. Sorry if I got that wrong, but ticker NBIS. This is what emerged when Russia's tech giant Yandex was forced to divest its international operations due to sanctions. What seemed like a geopolitical disaster has actually become one of the most compelling AI infrastructure players in the market. And here's why Nebius matters. And this is crucial. They're solving the biggest issue in AI right now, the biggest bottleneck, and that's access to GPU computing power. Everyone knows about a chip shortage, but here's what few people understand. Even if you get the chips, you need a massive infrastructure to run them. Each new AI server rack consumes 120 kilowatts of power. That's 10 times what a traditional servers use. Nebius is building the infrastructure to house and operate these power-hungry machines at scale. Their numbers are absolutely staggering. Revenue jumped from $15 million to $105 million in one single quarter. Their annual recurring revenue guidance was just raised from $900 million to $1.1 billion in 2025. Here's what really sets them apart. Their relationship with the biggest names in AI. You know, Meta is using their infrastructure to train their Llama language program. They're the official NVIDIA cloud partner with early access to new Blackwell chips that everyone's desperately trying to get their hands on. Their investment thesis is beautifully simple. Nebius trades at 3.3 times annual recurring revenue, while their main competitor, CoreWeave, trades at 10 times. CoreWeave does have more GPUs right now, but they're also carrying $4.9 billion in debt, while Nebius is completely debt-free. That right there is the kicker. That is what could, should perk your ears up. Goldman Sachs just initiated coverage with the buy rating, and the average analyst price target suggests a 28% upside from current level. But honestly, I think that's still quite conservative. This is what I like to call a transformation arbitrage. The market opportunity hasn't fully recognized that this isn't the old Yandex anymore. It's a pure play AI infrastructure company with Western management and Amsterdam headquarters. Now let's pivot real quick. So we touched on Palantir so far, and we touched on Nebius. And of course, everyone knows about how NVIDIA dominates AI chips. But here's what most investors aren't really paying attention to. Broadcom, ticker AVGO, is quietly building an AI empire that could be worth $60 to $90 billion by 2027. And they're not competing with NVIDIA. They're serving a completely different market that could be even more lucrative. So let me paint a picture for you. Here's what's really happening behind the scenes. Google spends about $8 billion on custom AI chips that only Broadcom can design and deliver. Meta has Broadcom building their custom training accelerators. And even get this, OpenAI, yes, the company who produced ChatGPT, OpenAI is working with Broadcom on 2 generations of custom chips. So the main key insight here is when you're on Google or Meta and you're deploying 1 million AI chips by 2027, even a 10% efficiency improvement saves you billions. So that's why they're willing to pay Broadcom enormous sums of money to design custom silicon optimized for their specific workloads. And these numbers that they have are kind of spectacular. Their AI revenue just hit $4.4 billion last quarter, up 46% year over year. And they're guiding for $5.1 billion in Q3. 60% growth in one quarter. Like, these numbers are mind-boggling, and you can see why I'm excited to talk about these companies. By fiscal year 2026, management expects AI to represent 75% of their semiconductor revenue. But the real game changer, of course, in 2026, Broadcom starts shipping their revolutionary 3.5D XD SIP platform. And of course, without getting too technical about what that means, this will essentially allow them to pack 6,000 square millimeters of silicone with 12 high bandwidth memory stacks into a single package. A single package. It's a genuine breakthrough that enables the next generation of AI chips. So these are very smart people working on, making the AI revolution much easier for these large companies, which then makes it easier for us to consume. And we haven't even talked about their VMware yet. Their $69 billion acquisition is exceeding all expectations, and infrastructure software revenue tripled from to $21.5 billion annually. They're achieving 76% operating margins in software versus 57% in semiconductors. And the cool thing is, trading at just 23 times forward earnings with a growing dividend, Broadcom offers something rare in AI stocks, very reasonable valuation with explosive growth potential. Speaking of, Morgan Stanley actually just raised their price target to $338. When 3 of your customers are each planning to deploy million AI chips and you're the only company that can design them, that's just not good business. That's almost monopoly information. And now we come to the company that makes everything else possible. Taiwan Semiconductor Manufacturing Company, ticker TSM. And as we know, it isn't just important to the AI revolution, they're completely irreplaceable. The concentration is staggering, and honestly, someone somewhat terrifying, as I like to say. They manufacture over 90% of the world's most advanced semiconductors, and essentially 100% of them of the AI chips that actually matter, right? Every single NVIDIA AI GPU that's transforming the world, guess what? It's made by TSMC. Apple's AI chips, TSMC. Now, of course, that might change a little bit due to, Apple, Tim Cook just making a huge deal or promise to Trump administration about designing their own chips in-house. AMD's AI accelerators, also TSMC. Those Broadcom custom chips that we talked about are all manufactured by TSMC. If TSMC stopped production tomorrow, their AI revolution would grind to a halt within weeks. So let's talk about numbers just a little bit. Their second quarter results were nothing short of spectacular. Revenue up 38.6% year over year to almost over $30 billion a year. Net income surging to 61% to a record $12.8 billion. But the number that made my jaw drop was their gross margins, which was 58.6%. They're charging whatever they want because customers literally have nowhere else to go, and the AI related revenue has exploded to over $10 billion per quarter. They're guiding for a 30% growth for the full year. The real story is that they're actually advanced packaging technology called CoWoS. This is the secret sauce that allows companies to connect AI processors with high bandwidth memory, and TSMC has complete monopoly here. They're expanding capacity from 36,000 wafers per month to 90,000 by year-end, then 130,000 by 2026. Even with the massive expansion, every single wafer is already sold out through 2026, and they've raised their prices, 10 to 20%, and customers are actually happy to pay this. Now, I know what you guys are probably thinking, what about the Taiwan risk? It's very real, but TSMC is addressing it. They're even investing $165 billion to build 6 fabs in Arizona, the largest foreign direct investment in U.S. history. This first fab is already producing chips for NVIDIA and Apple, and what's really excites me about it is TSMC's 2-nanometer production starts in the second half of this year. So they'll be able to be, the first to market with gate all-around transistors, delivering 10 to 15% better performance with 25 to 30% power reduction. The competitive moat just isn't wide, it's actually getting much wider. So for me, as an institutional investor, here's exactly how I like to be playing this opportunity myself. I want to be complete transparent about the risk, right? So I'm not going all in one single stock. TSMC gets my largest allocation of my AI portfolio. It's the safest play with the clearest moat. And as we know, moat is what allows companies to have that competitive advantage, right? Broadcom gets 30%. The VMware integration provides stability. The custom chip business provides growth. And of course, Palantir gets 20%, but I'm being tactical with, covered calls and protective puts because the volatility is with Palantir is kind of insane. And if the market were to correct due to Palantir's insane valuation right now, they could be the company that hurts the most when it comes to that, right? And when it comes to Nebius, they are getting a solid 10%, and this is my speculation play. That could be a 10-bagger or 0, but I'm willing to take that risk. And let me be clear about the risk here even more. The valuations look insane by traditional metrics, right? Concentration risk is enormous. Palantir depends on government contracts. TSMC has 90% of production in Taiwan, and Broadcom depends on 7 major customers, right? So the geopolitical situation could unravel pretty quickly if China does make a move into Taiwan. That's a different conversation for a different day, but TSMC becomes uninvestable overnight if that were to happen. And if AI regulation changes, everything could collapse. But due to the Trump administration, although everything is possible, I don't think it's very likely at all. So fingers crossed. And when it comes to the technological disruption, kind of cuts both ways. That DeepSeek announcement that I mentioned earlier in the video, it shows the efficiency improvements, but could also destroy moats faster than expected. And here's the thing, I'm thinking 3 to 5 years minimum. The companies building AI infrastructure today will compound wealth for decades, just like how Microsoft, Amazon, and Google did, after the internet bubble, right? And look, we stand at a very extraordinary moment in market history. The last time we saw a transformation at this scale, it created the modern economy that we know today. It minted more millionaires than any event in human history, and the AI revolution, I believe, will actually make that look very small. These 4 companies aren't just riding the AI wave, they're building the infrastructure that makes the wave possible in the first place. They're selling their picks and shovels in history's greatest gold rush. Yes, there will be volatility. Yes, there will be correction. But for investors with conviction, patience, and proper position sizing, this represents the kind of opportunity that builds generational wealth. If this analysis or video helped you understand the AI investment landscape a little bit better, smash the like button, subscribe for more deep dive investment research, and of course, drop a comment below which of these 4 stocks that interest you the most. And remember, this is not financial advice. Again, always do your own research. Never invest more than you can afford to lose. Final thought though, the AI revolution isn't just coming, it's already here. The infrastructure that is being built today, as already touched on, bring a lot of opportunities for the everyday investor like myself, and the winners are emerging right now. And for those with the vision to see it and the courage to act on it, the opportunity has never been clearer. Thanks for watching, and I will see you guys in the next one. Peace.